I thank the chairman for holding this important hearing today. It is critical that this committee continue to explore how the Biden administration's ill-conceived policy and regulatory approaches are harming our nation's economy. And thank you, Chair Powell, for appearing before us today. I'd like to lead off with a question that I posed for Vice Chair Barr when he recently appeared before this committee. As a representative for a largely rural district where my constituents, of which 86% are Hispanic, heavily rely on smaller institutions or community banking institutions for their financial needs, I am concerned about Mr. Barr's focus on factors that aren't necessarily material to the recent bank failures. His report on Silicon Valley Bank seemed to go out of its way to advocate for higher capital levels as a cure for the recent bank failures, instead of the failures of regulators and bank mismanagement. In fact, one of your other colleagues, Federal Reserve colleagues, Governor Bowman, echoed these concerns in recent remarks when she said, "The unique nature and business models of the banks that recently failed, in my view, do not justify imposing new overly complex regulatory and supervisory expectations on a broad range of banks. If we allow this to occur, we will end up with a system of significantly fewer banks serving significantly fewer customers. Those who will likely bear the burden of this new banking system are those at the lower end of the economic spectrum, both individuals and businesses." Just a couple moments ago, Rep. Donalds asked you a couple of questions, and your response was that you mentioned how important community banks are and that you are keeping them in mind with all that you do. As I speak with my local community and regional banks, they say that the increase in regulation and in capital requirements will really hurt them. With that being said, what I find as being an outsider in politics, new to the political arena, I find that people here in Washington, people who hold leadership positions, are often out of touch. And so I want to ask you, Chair Powell, do you personally bank with a community bank?
I have over time, not currently, but yeah, the last mortgage that my family and I had was you would like the story, I can tell you someday, but we had a very large bank which sort of failed at the last minute to come through with our mortgage, and we went to the local community bank, and they knew my family and they knew the house, and they were able to give us a mortgage without difficulty within a few days. So I have very positive experience with community banks.
So with your relationship with community banks in the past, how do you feel that increasing regulatory burdens would have consequences to these community banks?
So I really think that the things we're looking at are not about community banks. They're about the very largest banks, and to some extent, banks in the Silicon Valley Bank range is sort of 100 billion to 250 billion. So that's far larger than I would consider a community bank to be, under 50 and probably under 10 billion in assets. So those are not the focus of the regulatory reforms, I believe, that are going to be proposed to the board for consideration this summer.
And I will also hope that be true, because, as I said, in my district, we have a lot of community and regional banks that would suffer with increased regulation and capital requirements. And so with that, I have very little time, so I will yield back to the chair. Thank you.